If your business pays contractors, freelancers, or vendors, the IRS just changed the rule that affects almost every single one of those payments. And most business owners have no idea what happened yet. I'm Misha Barber and I'm a CPA, and today in this video I'm breaking down exactly what's changed with 1099 reporting for 2026. And I want to warn you up front because these two are actually going to be completely separate changes that you need to be aware of. And people mix them up constantly. Mixing them up can get you in some real trouble. So by the end of this video, you're going to know exactly which forms you need to send to who and then when. So let's get into it. All right. So the two changes that you need to be able to tell apart. All right. And here is the most important thing to understand before we go any further, because there are two different 1099 rules that change and they apply completely differently to you and your situation. All right. So the first one that you have to be aware of is Form 1099 NEC and Form 1099 MISC, also known as miscellaneous. Right. So these forms are what the business sends you directly as a contractor or vendor it paid. All right. So the second change affects Form 1099K, and this form relates to payment processors, so PayPal, Venmo, credit card processors send out, and not something your business sends out yourself. So these two changes actually moved in opposite directions. One threshold went up by a lot, the other threshold actually went back down to where it used to be years ago. So let's take them one at a time. So if your business pays an independent contractor, a freelancer, or certain vendors for services, you have likely been required to send them a 1099 NEC if you paid them $600 or more in a year. And that same $600 threshold applied to Form 1099 miscellaneous, which covers things like rent payments, prizes, and certain legal fees. And that $600 number had not changed since 1954. So I want you to think about this. For decades of inflation, and the threshold never moves. So starting with payments made in 2026, that threshold actually jumps up from $600 to $2,000, right? And here is what that means in plain terms. If you pay a freelance graphic designer $1,800 total during 2026, you're no longer required to send them a 1099 NEC. So if you pay that same designer $2,000 or more, you still have to file. And this threshold is measured per contractor per year on a cumulative basis. So if you pay a contractor $300 a month, that ends up to $3,600 over the year, which crosses the same $2,000 line, even though no single payment looked large on its own. So starting with payments made in 2027, this $2,000 threshold will be adjusted for inflation every year using 2025 as a starting point and rounded to the nearest $100. So if this number is going to slowly creep up over time, the same way the mileage rate does. And one more detail, the threshold for backup withholding moved along with this change. So backup withholding is the 24% the IRS requires you to hold back from a contractor's payment if they refuse to give you their taxpayer information. And that backup withholding requirement now also kicks in at $2,000 level, right? Matching the new reporting threshold. So let's talk about the real impact. So say you run a small business with 50 different vendors you pay throughout the year, things like cleaning services, repair people, occasional freelance help. If your average payment per vendor was around 1,200, you might have been filing 50 separate 1099s under the old rule. So under the new $2,000 threshold, a meaningful portion of those vendors might fall below that line, and you can end up feeling closer or filing closer to up to 15 forms instead of 50. And that is a real reduction in your year-end paperwork. So now let's talk about Form 1099K, because this is one that has been pretty confusing over the recent history, and the new change actually reverses something that almost happened. So Form 1099K is issued by payment platforms like PayPal, Venmo, Cash App for business accounts and credit card processors, all right? And processes and reports payments you receive for goods or services through those platforms. So notice the difference there. You do not need to send this form. The flat platform sends it to you and to the IRS. And here is the history. Back in 2021, a law called the American Rescue Plan Act dropped the 1099K threshold all the way down to $600 with no minimum number of transactions at all. So that was a massive drop from where it had been. The IRS delayed that $600 rule multiple times because they were worried it would generate millions of confusing forms for casual sellers, like someone who sold a used couch online who never expected to receive a tax form for it. Now, under the new rule passed in 2025 called the One Big Beautiful Bill Act, the $600 threshold has completely been repealed. So that 1099K threshold is back to where it originally was before any of this started. So that original threshold is $20,000 in total payments and more than 200 separate transactions in a calendar year. So both conditions had to be true. So if you received $25,000 through a payment app, but it was only 50 transactions, you would not cross that 200 transaction requirement. So no 1099K gets issued. But both the dollar amount and the transaction count have to be met. And unlike the 1099 NEC threshold, this $20,000 number for 1099K is not adjusted for inflation. It is actually fixed at the level going forward. So I need you to hear this part clearly because it is the single most misunderstood part of the entire topic. All right, these thresholds determine whether a form gets sent. They do not determine whether you owe tax. So if a client pays you $1,500 for freelance work in 2026 and they're not required to send you a 1099 NEC anymore because it's under this $2,000 threshold, you still have to report that $1,500 as income on your tax return. So the IRS does not care whether a form was generated. They care whether the income happened. And this is exactly why your own bookkeeping becomes more important and not less important as these thresholds continue to rise. So you can no longer lean on the 1099 forms you receive as your record of what you earned during the year. You need your own complete records, every invoice, every payment received tracked throughout the year, regardless of whether a form ever shows up in your mailbox. And that's why you need to do a really good job at keeping track of this. All right. So that's going to be key. So another thing that you need to understand is if you pay contractors, continue collecting Form W-9 from every vendor before you make your first payment to them. Even if you think the payment will still stay under that $2,000, you usually do not know upfront how much you'll end up paying someone over the full year, and you do not want to be chasing down a contractor's taxpayer information in January after they stop responding to your emails. All right, so if you receive payments through apps like PayPal, Venmo, or Cash App for your business, do not assume that just because you stay under $20,000 and 200 transactions, the income is not taxable. It is absolutely still is. So you want to keep your own income log. If you are a real estate or construction business with a lot of subcontractors, this is going to change meaningfully for you, reduce your year-end filing workload, since many small subcontractor payments will now fall under this new $2,000 threshold. So one more important wrinkle, even if a contractor is paid through a card or through PayPal, and the platform issues a 1099K for that same payment, you as a business may still separately owe a 1099 NEC if your direct payments to that contractor cross $2,000. So these two forms can both apply to the same underlying payment viewed from different angles. So that is not a mistake or a double counting. The IRS expects both forms where applicable, and they're designed to cross-reference each other. And that's why it's so key to make sure you're checking for this. So It's also worth understanding why Congress made this change, because it helps explain how to think about it going forward as you continue to work through these updates and changes. So the $600 threshold for 1099 NEC and 1099 miscellaneous have been sitting untouched since back to 1954. So back then, $600 represented a meaningful amount of money back then. Decades of inflation later, that same $600 was catching enormous numbers of small routine payments, things like a one-time repair bill or a small freelance project, or generating mountains of paperwork for very little benefit to the IRS. On that 1099K side, the story is a little bit different. So 2021, that drop, the threshold, the $600 was aimed at capturing income from gig workers and online sellers who were not reporting their income. But in practice, it would have generated an estimated 44 million new forms, many going to people who sold a couch on a marketplace app or split a dinner bill through a payment app, and who had no actual business income to report. And the IRS itself said this would create confusion, not better compliance, which is part of why they delayed twice before Congress finally reversed it. So both changes share a common goal, and the goal is to reduce paperwork for small, low risk transactions while leaving the actual tax obligation completely unchanged. So Congress raised the line for what gets reported and not the line for what gets taxed. And that's going to be the key difference with this. All right. So there is one more change worth knowing about. And separate from the dollar threshold itself, the IRS has updated the actual layout of Form 1099 NEC and Form 1099 miscellaneous for 2026 tax year. So these forms now include new boxes specifically for reporting cash tips and overtime compensation. So this ties back to other provisions in the same law, sometimes called the no tax on tips and no tax on overtime provisions, which allow certain workers to deduct qualified tips and overtime pay on their own returns. Because of this, the standard non-employee compensation box on the 1099 NEC is shifting from box 1 to box 1A to make room for the new tip and overtime boxes. So if you use an accounting software to generate these forms, make sure it has been updated for the 2026 layout before you start issuing forms, so nothing ends up misreported in the wrong box. And here's something a lot of business owners miss. These thresholds are federal rules. So your state can actually have a different and often lower threshold. So some states have already adopted the new federal $2,000 threshold for 1099 NEC and 1099 miscellaneous. Other states have their own number written into state law, and that number does not automatically update just because the federal rule changed. On 1099K side things, several states still require reporting at a much lower number than the federal 20,000 threshold, sometimes as low as a few $100s. All right. So if your business operates in multiple states or pays contractors who live in different states than you do, this is exactly the kind of detail to confirm with your CPA rather than assuming the federal rule is the only rule that applies. All right, so let's talk about some common mistakes I see with this change. So mistake number one is assuming income under the new threshold is tax-free. It's not. All right, the threshold only affects whether a form gets sent, not whether tax is owed. Mistake number two, stopping W-9 collection because a payment looks small at first, right? You often do not know the full year total until the year is almost over. Mistake number three, confusing the 1099 NEC threshold with 1099K threshold and assuming they are the same. They are not. One is $2,000, the other is $20,000 and 200 transactions. So make sure you keep a note of that. Mistake number four, ignoring lower state level thresholds because the federal number went up. Your state obligation can still kick in well below that federal line, so you want to make sure you're checking for that. Mistake number five, treating this as a reason to relax on your bookkeeping. If anything, this changes actually make your bookkeeping even more important, since you can no longer rely on incoming 1099 forms to tell you what you earned. So I want to make sure you're completely set with this. So I'm going to answer a couple of frequently asked questions as it relates to this. So does this apply to payments made in 2025? No. So the old $600 threshold for 1099 NEC and 1099 miscellaneous still applies to payments made in 2025. So the new $2,000 threshold only applies to payments made starting January 1st, 2026. Do corporations get a 1099? Generally, no. So with a few specific exceptions, like payments to attorneys and certain medical or healthcare providers, which still require a 1099 regardless of the entity type. So you always want to check your W-2/9 your vendor gave you, since it tells you their entity type. If I pay a contractor through my business card, do I still need to send them a 1099 NEC? Generally, payments made by a credit card or through a third-party network are reported by the credit processor or the platform on a 1099K instead, and typically do not also issue a 1099 NEC for those same card-based payments. So this is one of the more confusing edge cases and worth confirming with your CPA based on actually exactly how you're paid. So what if I already filed 1099s under the old rules earlier in the transition period? You generally do not need to amend or withdraw anything that was already properly filed under the rules in place at the time. So let's talk about a few caveats with this, right? So these thresholds apply at the federal level for the 2026 tax year specifically. So you always want to make sure you're checking your state-specific requirements separately. This video, of course, is for educational purposes. So whether a specific payment requires a 1099 NEC, miscellaneous 1099K depends exactly on how it was paid and who received it. So make sure you talk to your CPA about your specific vendor and payment situations before assuming a form is or is not required. All right, so let's talk about some next steps for you to be able to understand and implement before we move on. So number one, pull your full vendor and contractor list for 2026 so far and note that the total paid to each one. Step number two, make sure you have a completed W-9 on file for every contractor and vendor regardless of how much you think you will pay them. Step number three, keep your own income log. If you receive payments through PayPal, Venmo, or other payment processors instead of relying on a 1099K to show up. Step number four, check your specific state's 1099 threshold since they may not match the new federal numbers. Step number five, update your bookkeeping software's 1099 tracking settings so it reflects the new $2,000 threshold instead of still flagging vendors at the old $600 level. All right, so obviously there's a lot to be able to get from this video, but if you're looking to be able to save more money on taxes and build generational wealth, make sure you check out this next video here, and I'll see you in the next one. Take care.